Morning viewers and welcome to the channel. My name is Shannon Rivkin. This week's video and probably the last for the year will be on CSL after its big deal announced a couple of days ago. So what does CSL's big acquisition of V4 Pharma mean for the long-term share price outlook? First slide, just a little bit of a summary page of the deal. There's a lot in its investor deck that they released, but I think this is a good kind of summary of what they're trying to achieve here. This is a European company that they've apparently had their eyes on for the last 10 years or so, and accompanying it will be a big capital raising with a mostly covered by an institutional placement, but also a big share purchase plan, which potentially will get as big as $1 billion. And we're seeing a lot of analyst reactions to this because it's a very different business that it's currently exposed to. There is certainly some risk, and that's what some analysts are suggesting. But I think you need to understand with CSL that it's got such market dominance in its main plasma business that any real acquisitions, I think, in its core activities are going to be met with real antitrust concerns. So I think what they're trying to do here is move into other what they perceive growth areas, and they've made it quite clear how they believe the renal disease market is going to continue to grow at low to mid single double digits, a double digit level, and given its success in its previous acquisitions, you would, I think, have to give the benefit of the doubt to the management team and the board, and say that they know what they're doing here. At least in the short term, given CSL's premium rating it gets from the stock market, it's not a huge surprise to see that what they're buying is going to be earnings accretive, free cash flow accretive in the first year of ownership. They are predicting some cost synergies, but as they've said, that certainly that's not the name of the game here. They're not going to be cutting a lot of jobs and trying to extract a lot of value that way. But ultimately, I think 75 million, at least from some of the analysts, the analysis I've read, will probably be conservative. But as they said, this is not about the synergies. This is about bringing on a high quality business that has high growth, like its core portfolio. And I think where it goes to from here will be about how much of the benefit of the doubt you want to give to management. At least in the short term, I wouldn't be surprised, even though there'll be some dilution, of course, and some institutional shareholders may, based on what the share price does, there might be some indigestion from that big placement. But given it's pretty significantly accretive in the short term, I wouldn't be surprised to see CSL shares rally a little bit in the short term. But the long-term game, of course, is the name of the game, really, and we'll see how that goes. But I think a few things to consider. I thought I would just show the share price of CSL from November 2016. So I think within this period was the big Seqirus vaccine acquisition, which worked out obviously to be an incredible acquisition, one of its many acquisitions that worked out to be really well. And you've seen a share price effectively triple over the last 5 years or so. And obviously they're hoping that this deal can have the same sort of impact. As potentially there are headwinds coming into some of its business, like the vaccine business, where arguably you'll start to see the mRNA companies like Moderna and BioNTech, which is Pfizer's partner, potentially take market share in flu vaccines, for example, which Seqirus currently has such big market share in. So, I think diversification actually is, from my perspective, it's a wise move for CSL. Obviously, plasma still remains a huge part of its business. It's going to take a long time for acquisitions like this of any scale to really change its domination of the portfolio. But certainly this is a start. And I also wanted to show this, just show the real correlation between CSL and the Aussie dollar US dollar pair. I think over 50% of CSL's revenues are in US dollars. So, while it's clearly, been an incredible performer over the long term, and the currency has been a minor distraction, the stronger periods of outperformance, not surprisingly, have come in those periods of US dollar strength. And I think if you are going to have a little bit of a punt for CSL over the next few years. I think doing so without a view of the US dollar Aussie dollar pair is probably unwise. And it's been moving around a lot, but certainly in the short term, movements have certainly favoured CSL. So that falling Aussie dollar and the accretion they'll see out of this deal, I wouldn't be surprised to see this start a new bull trend in the stock. And as a loyal CSL shareholder, or many of those within the Rivkin family, that would be great news for us. Anyway, that's it for this week's video. If you did like the video, please click like and subscribe. And this will probably be the last video for the year, and I'll be back early in the new year.